Over the past week, there have been bullish signals from US stock markets, with all three major indexes moving higher since our last week's report. In this report, we are to discuss fundamentals that could be affecting US stock markets, add a small comment for Google and Tesla, the Fed's interest rate decision, and finally conclude with a technical analysis of the Nasdaq 100. Google has lost the antitrust lawsuit brought by Epic Games, the creators behind the popular game named Fortnite. The antitrust lawsuit, which was brought forward by Epic Games, claimed that Google's Play Store operated as an illegal monopoly. The allegations also included the claim that Google illegally ties together its Play Store and billing service, essentially forcing developers to use both functions in order for their apps to be included in the store. In a statement on its website, Epic Games stated, "The evidence presented in this case demonstrates the urgent need for legislation and regulations that address Apple and Google's strangleholds over smartphones. As a result, the ruling could weigh on Google's stock price, as the possibility for other lawsuits and the potential reparations that may be awarded to Epic Games could weigh on the company's stock price. Moreover, it may impact the company's revenue over a longer time period should regulators decide to impose further legislation and regulations that may hinder Google's revenue stemming from their Play Store." The Fed's interest rate decision is due out later on today, with the majority of market participants anticipating the bank to remain on hold. As such, given the tightness of the US employment market as reported in November's employment report, and the persistent inflationary pressures shown in November's CPI rates, we tend to see the risk as tilted towards the hawkish side. Yet, with the FFF currently implying a 99% probability for the bank to remain on hold, we do not anticipate a rate hike, but rather a hawkish pose by the Fed. In such an event, we may see the dollar gaining, as it may undermine the market's expectations of 4 rate cuts next year, and in turn could weigh on the US equity markets. Given the lack of market response to Fed Chairman Powell's last comments, we may see the Fed in an effort to underscore its message to the markets, overstressing the hawkish tone, yet that remains to be seen. Moreover, the potential for a delay in cutting rates could increase the potential risk for a recession in the US economy, which could further weigh on the US equities markets, as investors may opt for more safer assets such as treasury bonds or gold. On the flip side, should the bank opt to maintain a more cautious tone, allowing for an intensification of the market's expectations for extensive rate cuts in the coming year, we may see the dollar weakening, while the equities market may see newfound support by capitalizing on the prospect of easy financial conditions in near term. According to Yahoo Finance, Tesla has filed a recall of 2 million vehicles citing autopilot flaws. According to the article, the recall is in order to fix a defective system that is supposed to ensure drivers are paying attention when they use the autopilot feature. The recall will be via software update in order to fix the problems, which reportedly covers nearly all of the vehicles Tesla sold in the US since it activated the autopilot feature in late 2015. In conclusion, the acknowledgement of the defect, which comes after a 2-year investigation by US auto safety regulators, could weigh on the company's stock price, as it may open the company to future litigations and potential lawsuits, which may weigh on the company's revenue. US 100 price action remained in a relatively tight upwards motion in the past week, with the index currently testing resistance at the 16,375 line. We maintain a bullish outlook for the index, given that the RSI indicator is near the reading of 70, implying a rather bullish market sentiment, in addition to the upwards moving trend line, which was formed on the 26th of October. Yet we note that the Bollinger Bands appear to widening, in a sign that the price action may be slowly picking up a bit of volatility. For our bullish outlook to continue, we would like to see a clear break above the 16,375 resistance level and the 16,760 resistance ceiling, which is an all-time high for the index. Further than that, the next possible target for the bulls may be the 17,380 resistance ceiling. On the other hand, we note that the price action has hit the upper Bollinger Band, which may slow down the bulls or even cause a correction lower for the index, with similar signals being also sent by the RSI indicator reaching 70. Hence, for a bearish outlook, we would like to see a break below the 15,780 support level, with the next potential target for the bears being the 15,170 support base. Lastly, for a sideways bias, we would like to see the index remain confined between the aforementioned S1 and R1 levels. On a separate note, we would like to highlight that with the Fed's interest rate decision due out later on today, there might be high volatility in the markets. As this report concludes, we would like to thank you for being part of our financial updates. We wish you solid trading from all of us at IronFX.